Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of business so you don't have to, especially when there are roller coasters involved. Today we are diving into the latest filing from Six Flags Entertainment Corporation. Now, Six Flags is a name everyone knows, pretty much synonymous with thrill rides and summer fun, but are their financials as exciting as their parks? We are going to take a look at what they released on August 6th to find out. And if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below, and it's a great place to chat about all things finance. This document is a Form 8K, which is like a news bulletin for publicly traded companies. It's filed when important things happen. In this case, Six Flags is reporting their financial results for the second quarter of their 2025 fiscal year. Think of it as their mid-year report card. This tells us fundamental details about the company, like where it's incorporated and its stock exchange listing. It's like the company's birth certificate showing us its legal identity. This is a key piece of information for investors. It tells us that Six Flags common stock, the basic ownership units of the company, trades on the New York Stock Exchange under the ticker symbol. Fun, yes, fun. It's hard to miss that one. Now for the juicy part. This section is where Six Flags is telling us how they performed financially in the most recent quarter. They issued a press release on August 6th, and that's what this report is all about. It's their way of communicating their earnings to the public. The company is giving us the details of their second quarter results. While this 8K filing itself doesn't contain the full financial tables, it points us to the actual press release where those numbers are found. This exhibit is essentially the source document for their performance announcement. We are going to unpack what those numbers might mean for the company. Okay, so while this particular 8K filing is a bit of a pointer to the actual financial results released in a separate news release, the core purpose here is that Six Flags is announcing their second quarter performance. Think about what that means for a company whose business is seasonal and heavily dependent on good weather and consumer spending on entertainment. If their second quarter, which typically covers the prime summer months, isn't strong, that's a big red flag. Investors are always looking at how well these seasonal businesses perform during their peak periods because it sets the tone for the rest of the year. A strong second quarter can indicate good management, popular attractions, and healthy consumer demand. The opposite can spell trouble. Now let's imagine we had the full financial tables here. What would we be looking for? Firstly, revenue. Did ticket sales and attendance grow? For Six Flags, revenue isn't just about selling tickets, it's also about what people spend inside the parks. Food, merchandise, and those all-important souvenirs. We'd want to see if revenue is up or down compared to the same period last year. If revenue is down, say 10%, that could mean they are losing 1 in 10 visitors, or that visitors are spending less. Next, we would scan for profit figures, things like operating income and net income. Are they making money after all their costs are accounted for? A company can increase revenue, but if its costs to run the parks, staffing, maintenance, energy increase even more, they could actually be less profitable. We'd be comparing these profit numbers to see if their earnings are growing, shrinking, or staying flat. If net income drops significantly, it means less money is flowing to the owners of the company, the shareholders. We would also be very interested in attendance numbers or per capita guest spending. A 5% drop in attendance might be offset by a 10% increase in how much each guest spends. This tells a story about whether their pricing strategy is working or if they are attracting more visitors but not necessarily more spending. For a company like Six Flags, keeping those parks full and guests happy enough to spend more is crucial. Looking at the structure of these filings and specifically this Form 8K, the company is obligated to disclose material events. By referencing the news release, they are fulfilling that obligation and directing everyone to the detailed financial breakdown. This is standard practice to ensure transparency, though it sometimes means the initial 8K is a bit of a teaser for the full financial story contained in attached exhibits or referenced press releases. From a high-level perspective, Six Flags operates in a very competitive entertainment industry. They are up against other theme parks, but also other forms of leisure and entertainment, from streaming services to local attractions. Their strategy often involves investing in new rides, improving the guest experience, and managing costs effectively, especially labor and marketing. The numbers in that August 6th press release would tell us if these strategies are paying off. Are they seeing the fruits of new investments, or are their expenses outpacing their growth? Let's dive deeper into what those figures would likely reveal. Suppose the press release indicated a modest increase in attendance but a significant jump in per capita spending. This could suggest that their pricing strategy is working well, perhaps with more focus on premium experiences, or bundled packages that encourage higher spending. However, if costs like energy or labour have also risen sharply, their profit margins might be squeezed, even with increased revenue. From a Warren Buffett perspective, we'd be asking, is this revenue growth sustainable? Are the profit margins healthy, and is the management team allocating capital wisely? Are they reinvesting in the parks in a way that promises future returns, or are they just trying to squeeze more out of existing assets? We also need to consider external factors. Economic downturns can hit discretionary spending categories like theme park visits hard. Conversely, strong economic conditions can boost attendance and spending. The timing of this report in August would give us insight into how the crucial summer season, their most profitable period, is shaping up. Now, imagine the financial update mentioned a particular number like revenue per capita increased by 7%. This sounds good, right? But if attendance dropped by 10%, the overall revenue might still be down. It's like selling fewer cups of a more expensive coffee. You might make more per cup, but if you sell many fewer cups, your total sales could fall. We are always looking beyond the headline numbers to understand the underlying health of the business. So to wrap up, the August 6th filing from Six Flags is a critical update signaling their second quarter financial performance. While this 8K acts as a notification, the real story lies in the detailed results from their press release. We'd be scrutinizing revenue growth, profit margins, attendance trends, and per capita spending to gauge the company's health and the effectiveness of its strategies in the competitive amusement park industry. Looking at Six Flags historically, they've gone through various phases, including periods of significant improvement and challenges. When we see these quarterly results, we're essentially checking if they are continuing a positive trajectory or facing headwinds. Are they successfully innovating with new attractions and experiences that draw crowds and justify price increases? Or are they struggling to keep pace with evolving consumer expectations and competition? The numbers are the ultimate arbiter here, cutting through any marketing hype. Overall, Six Flags is a business that thrives on experience and demand. Their ability to consistently attract visitors, manage operational costs, and effectively monetize the guest experience are the fundamental drivers of their success. A solid financial report would indicate they are hitting on all cylinders, while a weak one would prompt a deeper look into potential issues with their attractions, pricing, marketing, or even broader economic impacts. What's your take on these potential Six Flags numbers and what they signal for the company's future? Do you think the fun ticker is truly reflective of their performance? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us to keep these breakdowns coming, and subscribe for more deep dives into the corporate world. Don't forget to check out the Discord in the description. It's a fantastic community. Thanks for watching. See you next time.